Hello everyone. My name is Rupam. I'm a consultant and I am also conducting a lot of trainings on GL, AP, AR, and many more topics, which is from the finance and account perspective. This is my LinkedIn profile, and today's topic will be financial ratio analysis. So we want to understand about financial ratio analysis. So what it is, like to understand that, what we have decided that we will go with one of the company website where you will be able to understand and link the financial ratio and see how company publish the financial statement. You can go to the Google, type any of the company name and get the financial statement, and or maybe the annual report. There you will be able to understand about the ratio as well. For what we say that for the any financial ratio, actually you need numbers what we get it, that is from the financial statement, so which is you maybe balance sheet account, income statement, or maybe cash flow statement. But today's topic, we will not be covering anything from the cash flow statement. We will only continue with the balance sheet and income statement. And your ratios are, again, when we talk about some of the ratios are measured in terms of percentage, some could be in number of days as well, right? So the classification of financial ratio is, again, depends, like when I talk about classification, we have, like on the basis of the financial statement, we have P&L account, balance sheet account, and on the basis of function, we have profitability ratio, liquidity ratio, activity, and solvency ratio. When we talk about profitability, we have gross margin, operating profit margin, and we for the liquidity, we will look into the current ratio, acid test ratio, and cash ratio. So these are very important ratio that which we are going to look into that, and we will not look into anything from these ratios, because these are the main topic that we are going to cover today. Now coming back to your profitability ratio, when we talk about like profitability ratio, the one which we spoke about, like gross profit ratio. Remember, uh, whenever we talk about gross profit and operating profit or the net profit ratio, you have a denominator as a sales or the revenue, right? And you can see the formula given here for the gross profit by sales is gross profit ratio, operating profit by sales is operating profit, and the net profit. What is important for you is that you understand the financial statement and you see what is a gross profit for me. So that will be given in the statement, right? For me here, I have, like, this is a gross profit here, and I have operating profit. When I'm going to deduct my depreciation or all the other expense as well. So whenever I calculate gross profit ratio, this will indicate how efficiently a company converts the raw material into the income. And your operating profit, basically, it says that how much profit a company makes from its core operation after deducting all the expense, right? And once you deduct, like a tax, right, or so that will be your net profit. So we call as, like it measures a company financial performance or profitability after tax. So these are the formulas, and once you calculate and multiply by 100, you can see I have the ratio for 2 years, which is given over here. Basically, a company published a report, and they give the ratio for 2 years, 3 years, and 5 years, depending on the requirement of the company. And this is an example of a Hindustan Unilever Limited, where they have given for the 2 years, what you can see here. And yeah, you have current ratio. You can see they have given operating profit margin and net profit margin ratios. So this is something which we have spoken just now. Likewise, in their financial ratio, they have given this. At the same time, I'll show you the a link. How does it works? Let me just go there. Yeah. Annual report of HUL, which you can, this is annual report of HUL, which you can see here. You can see they have given the key financial ratios. The same screen I have given over here. You can see, like, a net profit margin ratio. They have given their current ratio. All this they have given, right? When you look into their ratio, they have also given here, like, how have they calculated. When we talk about net profit margin, what they have given, that the net profit margin is equal to how much net profit is generated as a percentage of revenue, right? So this is done again by dividing the net profit by turnover or revenue or sales. So this is what I was telling you. It's very simple for you. Once you understand the basic of ratio, you can go to any company annual report and you will be able to understand that. Like for the operating profit also, they have given it, right? So how much, like, profit are you going to make from these operations, right? So they have given it here, right? So the same way, you can just go and check here. Now, moving on further, we talk about second part, that is my liquidity ratio, which talk about that a company's ability to meet the short-term obligations. So, companies like you have a lot of obligations. So, this will measure that how much time I will take if I have to meet my obligations of a company, right? Basically, in a liquidity ratio, the current ratio and the quick ratio is very important, which is highly used. Now, for this example, I have taken suppose one of the extract of the balance sheet where we talk about current assets and cash account, all those. So current usually means anything which is having a lesser than 12 months of time period is called as a current, right? For me, when I talk about like current ratio is a current assets by current liabilities. Remember, so firm must have a current ratio of at least one, right? And if it is more than one, which means that it can meet the debt obligation, current debt obligation, and also it has a little left over with them. So my assets values over here is more than the liabilities over here, right? So this is how it is measured. At the same time, asset test ratio or a quick ratio is very important, which measures like current assets minus inventory, which is called a quick ratio. So I will deduct the inventory portion from here, from these current assets. I'll deduct the inventory portion and then I will divide by current liabilities. So my inventory deduction will be around with that. If I deduct my quick ratio will be having like a 249 and divided by current liability 531, which remains 0.47 over here. So this says that short-term debt without selling inventory, the quick ratio must be attached to one again. So this is something which this measures. And then you have a cash ratio, very important, which is actually cash and cash equivalent by current liabilities, so which indicates a company capacity to pay off the short-term debt obligation. So these three ratios are very important in terms of the liquidity, right? And moving on further, so when I said that like these ratios are actually when it is important, which means that we have a reg requirement or you have a regulatory requirement in any company. This example what we have taken is from the TCS annual report, now which you can see here. Their requirement is that they have also published the data for here 2 years, and these are like current ratio, the net profit ratio you can see here. So some of the examples you which you are able to see now coming back here, you know uh, I'm just taking you to the TCS website to see that how these ratios has been published. So when you come here, you can see in this TCS website these reports. This is how it has been published over here. The same screen is appearing for you. You will be able to see for my current ratio in times, which is measured, which means current assets by current liability 2.2 for current year and for previous year 2.4. Like the debt equity ratio in times, again this is measured, and like the way you can see net profit ratio in percentage, which is profit, and by revenue, which is 21.5% and 20.5%. So suppose you are able to see the annual report for the TCS and also for the HUL, right? And once you have the data, what you can do that, no, suppose if you have your own requirement to prepare the data, you can also prepare the data and publish it via Power BI dashboard. So this is the report which you can publish it and you can generate it. For that, what you can do that you can log into Power BI here and you are able to see that how I'm able to present the data. So once you present the data, you will also be able to see that you get an analysis from the system itself, and no, any changes required, you will be no you will be able to make to that. So you can visualize your data in any of the form which you want with the help of the Power BI, and you will be able to publish this data for the management reporting. Yeah, so that is how it is very important for us to understand what are the important ratios what we have and how do we calculate it, and then how do we measure, is it measured in terms of like number of days, times, percentage, whatever, and then you will be able to publish that dashboard report. And this is how my financial reporting training has been done for analysis like of the financial statement. Yeah, thank you.